Hello and welcome to Personable, a podcast focused on speaking to the world's best, enabling you to become the best that you can be. Today, this is Personable Markets. I think it's the sixth or seventh episode we've been doing this now, in which every week I speak to a hedge fund manager, VC, or investment banker. This is the third episode in which I've spoken to my good friend, Luke Sloman. Luke is a third-year business and management student at the University of Exeter, who's currently spending his study abroad at the University of Sydney. He grew up in Tokyo until the age of 13 before moving to the UK for boarding school, and his academic interests focus on finance-related modules which complement his broader studies in business and management. This is his third time on Personable, which actually makes him the most occurring guest on the podcast. Alongside some big names such as CEOs of Barclays, Olympians, world-class athletes, and now Luke is the most popular podcast guest. So Luke, how do you feel about being having this accolade?
I mean, I think it's got to be one of my greatest achievements. Being above those Olympians and CEOs. No. Genuinely, it is an honor. I've had a lot of fun recording these podcasts with you over the last 2 weeks, and I'm sure today will be no different.
So, Luke, what's going on in the news this week? Anything different from other weeks?
So one of the first thing that we will look at is EA and the 55 billion LBO, which is the biggest LBO on record ever. In the US, there's been a government spending shutdown over the last week. As a result of politics, and we'll look at the impacts of that, both macro and micro, looking at smaller business as well. Also, there's been a lot of issues with the London IPO market, and then there's smaller stuff like Tesla, Pfizer, and then we'll look at the Eurozone, crypto, and other areas, impact of social media, for example.
Yeah. So exactly as you put on. I'll start off with EA. So as you mentioned, Electronic Arts, as it's otherwise known, has been through the largest leveraged buyout of all time. So on Monday, they said they'd go private in a $55 billion mega deal with a group of investors, including Saudi Arabia's public investment fund, private equity firm Silver Lake, and Jared Kushner's investment firm Affinity Partners. They're known for The Sims, football games, Madden, NFL, and FC. With the popular video game formerly known as FIFA. The deal makes a continued push into the video game industry by the Saudi Arabian fund, which already had a 10% stake in EA, and EA shares rose by 4.5% on Monday. I think growing up in the UK, particularly with FIFA, EA was always this big brand name. EA Sports, it's in the game. Do you want to try your EA Sports, it's in the game, Luke?
Yeah, go on. EA Sports, it's in the game.
Yeah, I think you did that much better than me. What does this leverage buyout? What do you think it means for the broader markets? What do you think it means, for kind of your childhood and all the big fans of FIFA growing up? And what do you think of the broader impacts of a deal like this with deals moving forward?
Yeah, I mean, look, first and foremost, as you pointed out, EA Sports is probably quite a big part of a lot of people's childhood. Obviously, you touched on FIFA, especially from a UK perspective, but they've got other massive games like Madden, especially which is more NFL, which is again very popular in the US. The Sims, which has got such a wide variety of target demographic. Battlefield, Apex Legends. So again, really focusing on such a wide segment of the gaming market. So I think it's a deal that a lot of people in this last week would have taken notice to. Just because of that personal touch, and the result of playing these EA games for a long time. So yeah, just looking at the deal itself, it's taken to get that 55 billion. It was about, I think, $35 billion in equity, $20 billion in debt. So it's got less debt than more like 2007 style LBOs. But it's still sensitive to spreads and risks in the future based on interest rates and maturities. I think that it will this is the biggest LBO on record ever, not just in one specific market. So I think it's quite interesting to see how the markets respond to that. Obviously, EA shares rose by 4% after this deal came into play. So markets do think it's a good deal. And yeah, I mean, I wouldn't be surprised if there's more deals like that, more deals like this, especially from sovereign wealth funds like the PIF in Saudi Arabia. Um, for Saudi Arabia and their push into this, like the push into EA, it's one of the many large transactions into not just sports, but now into gaming as well. Um, to which could be described as sports, like greenwashing, um, and yeah, trying to cleanse that image away from just being this oil country, sorry, to more of a oh look, they own all these sports like Live Golf, for example. They own these sports events. They own hosting all these events. I think they had a massive comedian um, perform in Saudi Arabia the other night, which again another um, sort of consequence of this movement. And now they've bought EA, which is loved by so many people worldwide. So I think especially from a Saudi Arabia perspective, I would not be surprised if this continues to grow. Um, as EA Sports in the nature of their games is very similar to like real sports. It's a lot of their games are based on real sports teams which are watched by billions of people across the world. So I would not be surprised at all if Saudi Arabia invest more into this area and into esports. Esports was the fastest growing sport industry in 2020. And while yes, that has slowed down in the last 4 years, because 2020 growth is a result of the COVID pandemic and more people spending time inside. It's still a massive industry and a very interesting industry to keep an eye out on, I think, in the future.
Yeah. Just to add to that, I've made 3 notes. I put 1, culture; 2, government impact and the Saudi Arabia investment fund; and 3, the Four Seasons model. So to just break that down in terms of EA, even with my horrendously bad attempt at EA Sports, it's in the game, and Luke's slightly better one. EA
Slightly.
Sports has kind of been entrenched within the culture, particularly in the UK and even in the US with Madden. And so for Gen Z and even millennials, I would argue, this is a sort of game in which the control of that has had an impact on culture, more simply just from buying a product or engaging in something. But similarly to something like social media, this has been an output of how people have spent hours upon hours bonding with their friends, learning how to create the best team on FIFA or Madden. So a lot of time and time investment have been put into these games, and a lot of friendships created or broken over them. And so the actual impact of who owns it has quite a big implication. I think we've also seen a big rise in incredibly high valuations, not only in the sports world, but also in the e-gaming world, with Activision Blizzard being acquired in the last few years, as well as you're seeing GTA 6, I think is likely to come out either this year or next. And we're seeing, hundreds of millions of views across social media and lots of hype for that. I think it's been like 10 years since the last game dropped. So esports is doing really well. Secondly, as you mentioned, Saudi Arabia government trying to get more into other things, greenwashing, as you put it. Another term I've heard for that is sports washing. And as well as acquiring sports teams, getting more into gaming, getting more into more cultural things, and trying to bring people there, not just from a standpoint in terms of how can we make Saudi Arabia look better, but also from a standpoint of how can we make our country and our economy more sustainable beyond the point of simply just having oil in the time period of whether in a couple hundred years or 1,000 years or whatever it is, they get to a point where they run out of oil. I also think it's really interesting that it was Jared Kushner's firm that helped to put this deal together. And despite not having, actually Trump being involved in it, his son-in-law having quite a big impact on this deal, and with Trump having, a lot of deals going on with the Middle East, I think it's very interesting that, there's such strong ties to the president. And I think the third thing I mentioned was the Four Seasons model. The reason I mentioned the Four Seasons, for those that don't know about it, it's a very popular high-end hotel throughout the world. And a model that they often use is they give their, it's almost like the franchise model of McDonald's, in which they give their name, they give their brand, they give their culture, the way, their logo and how they put hotels together. But it's usually actual external operators and external backers who go about doing the deal. And I actually think there's been an uptick in private equity deals such as this one, in which the kind of front is Silver Lake, it's Jared Kushner's firm Affinity, but it's the Saudi money that's backing most of it. And I think we're going to continue to see that moving forward as we kind of get these unbelievably insane deals in which typically private equity funds would have only had a limited amount of money. But as there starts to be really attractive deals, they use their logo, their image, and their management team as the front. But they go and get Saudi Arabia money, or the Norwegian investment fund, or money from other backers that wouldn't want to put their name at the forefront. The other big topic we talked about, and you mentioned at the start, was Tesla. So I put a lot of these are from the Wall Street Journal if you want to check them out. But Tesla is turning its sales around. Elon Musk's electric car maker set a new quarterly sales record, surprise reversal of its recent steep declines. Global EV deliveries grew 7.4%, in a large part due to US customers rushing to take advantage of an expiring $7,500 federal EV credit. Tesla reports its full third quarter earnings on October 22nd, so in 2 to 3 weeks' time. It remains to be seen how much EV demand there will be without any US tax breaks, and how Tesla's sales fare amid Musk's plans to pivot from human-driven cars and focus on autonomous vehicles and robots. I think there's been a very interesting point on the standpoint of the EV credits, because as Donald Trump focuses less away from renewables and more of an emphasis back on fossil fuels, obviously Tesla is going to be it's going to have a big impact, a big negative impact on its sales, as a lot of car companies were also trying to push more towards electric vehicles. They have more electric vehicle stations all over the US, but now a lot of these plans are being halted to favor for non-renewables. What do you think will be the overall impact on Tesla? Do you think that they will keep focusing on their cars? Do you think the humanoid robots will be the key driver of success? We talked about it 2 weeks ago that Elon Musk had this huge new pay package in order to incentivize him to keep getting involved with Tesla and with Tesla stock. What do you think is the main goal for the US? Do you think they should still be looking into renewables? Do you think they're going to lose to China? What's your thoughts on Tesla and the surrounding impacts?
Yeah, good question. I think first and foremost, if I'm not mistaken, I believe even when it comes to electric vehicles, it's obviously a better alternative to normal petrol cars in terms of the environment, but it's also a matter of how these battery charging stations are powered, I believe, if I'm not mistaken. And I think you can have these battery powered stations which still could run on fossil fuels, right? And obviously the goal is to have these power stations being run by renewables, or completely on renewables, or at least majority renewables. But if the energy that's being produced isn't from is from non fossil fuels, then I don't think that'll make much difference in terms of Tesla's future, as yes, the US is shifting away from renewables in its current administration, but I think that these battery power stations will still, for the cars, will still be able to run and function properly. And with the incentive of, as you mentioned, $7,500 for EV vehicles currently, I think it's a great time in the US market to go purchase a car. Especially when times are still tough. There's inflation still above the target rate. Purchasing cars is a very important decision. You want a car that's going to last a long time. You want a car that's reliable, but also not too expensive. And Tesla cars are good quality. And as with $7,500 of incentive to go purchase one, I think now is the best time for a customer in the US to go out and purchase Tesla, which will be very beneficial. And looking at their most recent quarter, they produced over 447,000 vehicles, delivered over 497,000, which are both new records. and I believe they have a product tease tomorrow for a new product, which will also drive interest within the car within the company. So I think for Tesla right now, the future's positive. I think obviously at the back end of around the time when Musk was involved within the US government, there was a lot of issues with the share price and that being that close to the president probably wasn't beneficial to Tesla at the time. But now that ever since that Doge got Musk left Doge and the US government, and they've sort of had a bit of a falling out. The It's become more independent from the government, and um, yeah, Tesla they haven't been doing too well. I mean, they're still too well in perspective. They are still a massive business, but I think, yeah, especially with these record Q3 deliveries and sales, being much greater than previously anticipated, I think we can look at a successful few months for Tesla in retrospect. And looking more at a sort of wider environment and looking at renewables as a whole, with the US and China, look, I can understand where Trump's coming from. Renewables are very expensive. Like they're not at this current moment in time. They aren't really cost effective. Um, to to you know go mine coal, go drill for oil, and using that as power or gas, using that for power is much cheaper than renewable products. But I think renewables are the future, in my opinion. Um, I don't. I think the stats that we get around global warming and what the potential future can hold is, I think it's going to come into fruition definitely in our lifetimes, and especially in our children's. And I think that it's a very serious issue that needs to be looked at very seriously right now. And ever since the Paris conference in 2015, when I believe 196 countries, don't quote me on that,
I
signed
think
and
that's right.
accords. I think yeah, it's about 196. I might be slightly wrong, but most of the countries in the world signed an agreement to declare, right, we've got to stop this. We've got to get it below 1.5 degrees Celsius. I think there has been a lot of positive strides moved forward, but
195. No,
195,
196.
196, there we go.
Yeah.
I'm pretty happy about that. But yeah, so yeah, yeah. Ever since then, obviously, there's been a lot of positive strides moved forward. But this last year, since Trump's been in power, hasn't been great for that. Obviously, in the US and China, albeit they still do have the largest coal production. If you look at their energy share, they are substantially growing their renewables. They are the biggest producer of offshore wind in the world by far. They overtook the UK a good few years ago now. They've got massive hydroelectric power dams. Like if you look at the Three Gorges Dam, massive investments. And they are pushing forward to renewables because previously, if you go back 10 years ago, a lot of people were saying, "Oh, China's gonna keep burning coal. They're not gonna go to renewables." But now they've really embraced it, and yes, because their market is so big, they do still consume the most coal, but they are definitely heading in a positive trajectory if you look at just the pie chart of the energy production. So I think for the US, while I can understand that going for fossil fuel right now, where times are still a bit tough, especially with energy prices, it is a short-term move. I think in the long term, renewables are still so important for the future, and not just our future, but all our children, grandchildren's future, and ensuring that they have the same opportunities and that we were able to have when we were children.
I think the biggest barriers to entry right now are one, subsidies. So how
Mm.
affordable are they? If you currently have a car, how likely are you to switch in terms of, it's much more accessible and easier to get a gas powered car than it is to have an electric car. So you need to have some form of incentive there, either by the car being cheaper, more accessible, or having a subsidy to be able to get there. The second most important thing, I think, is how available charging parks are. and also how short it takes to actually go about and charging your car. So I think if Tesla can keep putting loads of charging spots all over the country, be much more incentivized. In terms of the price of the car, a very popular Chinese company called BYD, in even places like Australia, they're selling cars for only 10,000 USD. I think if there is an ability for Tesla to be able to get the cost of production down to a point where it only costs $10,000 to go about selling their cars, that could lead to a mass switch of people to Tesla. But I actually think that a lot of that has already been built into the stock growth story of Tesla, and I think the next big thing is these humanoid robots. I mean, even as you're seeing with robo-taxi being put out in places like Texas, in terms of if I was to go get a 10-minute Uber, that might cost me between $10 or $20, depending on how busy the traffic is and how in demand Uber is. But if you were to go on robo-taxi for the exact same car, it would only cost between $2 to $4. And I think as the cost of production gets incredibly low in terms of, having to get someone to, drive your car, or someone to work in an Amazon factory or whatever it is, if that cost of labor is stripped out to the point of a humanoid robot, that would lead to, a mass use of Tesla humanoid robots. So a massive growth story for the company, but would also save a lot of money for a lot of other companies. So you could look at companies like Amazon, as I just mentioned, for things that could benefit from this. So I think that is the main storyline to look at moving there going forward. The next big company that has had a big impact recently has been Pfizer. So President Trump on Tuesday announced a deal with Pfizer over drug prices and unveiled his plans for a website for Americans to buy discounted medicines directly from manufacturers. Trump said the new government-run website will be called Trump Rx. Trump said Pfizer would offer some of its drugs on the website and introduce new drugs to the US market at reduced prices. In return, Pfizer gets a 3-year exemption from national security-related tariffs as long as it invests in domestic manufacturing. What do you think will be the overall impact of this deal with Pfizer? How do you think it will both keep Big Pharma happy whilst also keeping consumers happy? I mean, I personally think it's kind of keeping the best of both worlds, in which Big Pharma, donates a lot to presidents and a lot to political parties, and so the people working in those parties have got to keep the people that are donating to their campaigns happy. Otherwise, they won't be able to get elected and be able to get any policies in place. But at the same time, from a consumer level, we actually need in the US, we need cheaper healthcare. And so this kind of seems like a way to get there. But do you think it's enough? Do you think more should be done? What do you think about Trump naming this website after himself? What's your sort of thoughts on this arrangement?
Yeah, I think, as you said, I think it's definitely benefiting both, Pfizer, Big Pharma in the US, as well as consumers, because look, medicine prices in the US are, it's known to be pretty outrageous and very expensive. You've got, you hear some awful cases of people not, getting seriously injured and not calling the ambulance because they can't afford it. And look, while that won't specifically help this problem, but I think any deal to lower these prices for drugs and for consumers, I think, is a very positive deal, because the US is a first world country. It's the biggest economy in the world. And I don't think it's right to have people who can't afford these drugs. They might be in life or death situations, or in very critical situations, and they just can't afford it. So then they have to make do without the drugs, and obviously awful things can happen to that. And also, the fact that Pfizer are investing $70 billion in US manufacturing, I think that's very good for, the consumers as well, because it will help. It will help with employability and, create probably more job opportunities, as well as it's good for, Trump. Obviously, in the last year with his tariffs, he's really trying to bring manufacturing back into the US and, create jobs through there. So by Pfizer investing $70 billion, it's going to be a very good incentive. Well, it's going to be a very good bonus for Trump and his policies. So what was the second part of the question?
The second part of the question was, what do you think will be the wider impact of that? And also, what do you think about Trump naming this after himself?
Yeah, so look, the wider impact, I think, well, first of all, we start with Trump. I think Trump naming it after himself was was an interesting choice, to say the least. I think it is classic Trump, and it's quite it's quite funny. But I think I think it's just classic Trump, really. It's you probably guess it. It's not that surprising, to be fair. But looking at the wider impact of this deal, I think if this kind of deal can be, if this kind of deal turns out to be successful for both the consumers and big pharma, as well as the the US government in general, I think that we definitely can see more of these deals occurring between other big pharma companies, because as I said, lowering costs for drugs and medication is very very important, and it gives access to these types of medication more people. The US is a massive country. It's got about 50 million people. And even if 1% of these people don't have the money to access these, that's still 3.5 million people, right? That's still a very substantial amount. So by lowering drug prices, it's only beneficial to everyone, I believe. And Pfizer's still getting something out of it. They're getting tax exemptions, tariff exemptions, as long as they invest. And I presume for them that the $70 billion that they invest into the market, into manufacturing, would be less than the amount they would lose from these without these exemptions. So I think it's a very positive deal for all round. And if this continues, I think we'll definitely see more of these deals being cut out for between big pharma and the government. And hopefully this will help consumers within the US market.
So I think one of the biggest stories of the last week that particularly caught my attention, as I think with yours as well, Luke, has been that the UK has dropped out of the top 20. It's now 23rd in terms of global M&A activity, only getting to $220 million worth of M&A activity in the whole of the UK for the whole of 2025 so far, which just seems absolutely crazy to me. So I kind of wanted to just add some perspectives on what this looks like, compare the UK to the US, and then also add in why I think the US has more than the UK. So London has slipped out of the world's top 20 IPO markets as the third quarter ends, overtaken by Mexico and Singapore in a fresh blow to its standing as the global finance hub. The UK exchange has slipped 3 places to 23rd in a Bloomberg ranking of the world's busiest IPO destinations, placing it behind the frontier market of Oman. Volume this year dropped 69% to $248 million, the weakest haul in more than 35 years. Compared to the US, in the first 3 quarters of 2025, there have been approximately 271 IPOs, raising an estimated $44.5 billion in gross proceeds. And then I wanted to compare it, the two GDPs of the countries. So the UK GDP is about $3.8 trillion, and the US GDP is about $30 trillion. So if you were to take the US GDP of $30 trillion with $44.5 billion in IPO gross proceeds, and then you got a tenth of that, you would estimate about $4.5 billion. But no, the UK is only at 248 million. So it's like a hundredth, or something ridiculous in terms of its level. So then I wanted to ask the question of why does the US have more than the UK? And there were kind of 5 main reasons which we found out. So number 1, there are lower valuations and depressed share prices. UK listed companies often trade at a discount compared to their US counterparts, suppressing market value and deterring growth-focused firms. 2, deeper liquidity and a larger investor base in the US. The US markets, the New York Stock Exchange and NASDAQ, offer vastly more liquid trading with combined market caps exceeding 48 trillion versus the London Stock Exchange of only 3 to 4 trillion. 3rd, administrative and regulatory burdens. Despite reforms like the 2024 overhaul of UK listing rules, which simplified processes, remove votes on significant transactions and align with international standards, the London Stock Exchange regime seems much more stringent than the US. 4th, limited domestic investment, especially from pension funds. UK pension funds allocate far less to domestic equities, only around 5 to 10%, compared to peers in the US, which is around 30 to 40%. or Japan. This creates a virtuous cycle abroad, but a vicious cycle in London, which keeps low demand, keeping the prices down. And lastly, post-Brexit and global competition factors, Brexit has fragmented access to the EU capital and talent, while the US has benefited from a unified, massive pool of investors. So I threw quite a lot at you, Luke, in terms of how I break down the situation. What's your kind of view, more from someone that's spent some time going to school in the UK? You're half English, probably identify as English, as would I, having lived in multiple countries around the world. What's your sort of take on only 248 million in M&A activity for the UK? Do you think it's going to keep getting worse? Do you think it's got anything to do with the Labour government? And do you see the UK getting any better in the years to come? And what do you think would have to change for investors to be more positive about the UK and for M&A activity to increase?
Yeah, I mean, look, I think it is definitely a cause for concern. To a certain degree, obviously, we mustn't panic. But it is very worrying that only 250 million, was it? 250 million has been raised this year from IPOs. Especially, using your stats, like in the US it was worth 10% less. It was $44 billion IPOs compared to their economy now. In the UK, it's nothing compared to their GDP. So definitely cause for concern, and I think. Yeah, I think look, one of the reasons why there might be a bit of headwind and risk is because there are still a bit of volatility and macro uncertainty in the UK. Geopolitical risks, supply chain, trade tensions, inflation, they're all stuff that have been going on for the last, well, 4 or 5 years now, really. But especially trade tensions and supply chain stress, especially more recent. Um, I think the valuations compression is definitely a cause for concern because if US and Asian exchanges are offering high valuations and great liquidities, of course companies are going to choose to uh, make their deals on these markets because it's just more beneficial for them. It's just common sense, really. So I think that is definitely one area that has to change. And some of it might be because of government. There is a 0.5% stamp duty on share purchases, which is a bit. It's not, while 0.5% in itself is not that big. If you're spending billions of dollars to purchase a company, or even if it's millions of dollars, um, it's still a substantial amount of money. That look, if you do it on the US market, for example, you will not have this handicap. Um, so that's definitely an area that might be looked at by Labour, to see if if they can reform that and get rid of this deterrent. Obviously, for the government's perspective, they're struggling with funding right now. They're with the budget coming out next month. I think there's a lot of expectations of tax rises as a result of this fiscal struggle with funding. So by getting rid of this 0.5% would, I don't know if Labour would want to do that. But if it's only 250 million in IPO this year, is that 0.5% really doing that much? I mean, it's earned the government 1.25 million pounds this year. Right. It's nothing compared to what they're looking for. So look, I think 1.25 million is not worth it to have this little amount of IPOs in terms of value in this country. And I think yeah, look, I think it's definitely an area that that the UK has to look at and think how are we gonna become more competitive? How are we gonna encourage these investors to come back into and companies come back into the UK? Um, but I think for that reform, there has to be some reform. There has to be um, some sort of return in reputation because 23rd in the world is, I mean, for a market that wants to be a leading financial hub in the world, 23rd in the world is not a number of a leading financial hub. That is well, yeah, it's just a
Not the
financial. It's not.
it's not a G7 thing. It's more of a or nor a G14 or G21. It's like they're just
No,
just going down.
it's a top 30. It's not. Yeah, it's look. They went for. I think I think even a couple of years ago they were the biggest stock exchange in the Europe, but I believe Paris, could be wrong, but another European city overtook them. And if so, it's not something that's really happened over the last year. It has been a gradual decline, and I think it has to be looked at because it's a serious cause of concern. Albeit, you know, the year's not done yet, and there are talks of potential deals occurring. There was a um in the future, which will definitely help the IPO market. I believe that there's a um forgot I've completely blanked on the company name, but there is a company who are prospectively looking to put their company on the UK IPO market, which is going to be valued around 1.2 billion, which straight away will raise the IPO deal value in the UK by sixfold. So that could be the future though. There could be a few. It could be the case where there's a few marquee, headline deals in London, but these most of the smaller stuff is just very small and almost not irrelevant, because that's a bit disrespectful to these companies, but um, not as relevant as the IPO deals that you'll probably get in the US market.
There's thank you for breaking that all down, Luke, and also showing the possibility for more deals later in the year. We'll see if those actually occur. Another deal that was supposedly going to happen was a dual listing of Robinhood on both the London Stock Exchange but also the US, getting a particular deal with the Labour government. But I just think it's just like I just think it's absolutely ridiculous. Like I feel like there's got to be someone somewhere in the government or some economist or some politician that goes, this is a really big problem. Instead of how do we get more tax out of it, as Rachel Reeves has still got that big problem with the $50 billion tax hole that she's got to fill. But actually, how do we go about getting more jobs in the country, more big industry coming back to the UK? And I think for that to happen, you actually have to go, instead of what can we take from these companies by them getting to be in the UK, but what can we give to these companies by allowing them to be in the UK? I think the mindset is backwards. Because if I'm a company and I list in the US, I'll get a bigger valuation, more liquidity, less taxation, less regulation, more people interested in what I'm doing. And even the rhetoric of that big business in the US is, oh, you've made it, you've done incredibly well. Where in the UK, it's, all right, let's take every little penny we can from you. You're going to do bad, get a second home here and we'll take it off you. We'll tax you for that. The UK has to be much more open for business, not simply from a, do you lean to the left, do you lean from the right, but more so because a lot of the people that run these businesses who have earned a lot of money in the UK, they're all just going to leave. In this globalized world, that we aren't stuck in a country and simply have to go, oh, these taxes are high in 1950s UK, we're going to have to pay them. Instead, people just get up, they leave, they go somewhere else, they pay their taxes elsewhere, and they bring their businesses, they bring their jobs, they bring their GDP impact elsewhere. So I think that's something that the UK has to do. And for all the geniuses at Oxford and Cambridge and in the Labour government, I feel like these people have got to say, all right, enough is enough. How can we put our smartest people together and realise, how can we make sure that the UK is back open for business? And there are kind of three ways that I thought about real-time impact that I think has had a profound impact on 2025 as a year. I think the first one, more personal, has been the idea of real feedback from building a business and building a YouTube channel. So for me, prior to having a YouTube channel, if I posted a video and I put something out in the world, I would have my own preconceived beliefs of what I would think is successful in terms of a title, a thumbnail, a description, a guest. But actually by putting out content, and now I think this is the 99th episode of Personable, I've realised that there was a complete mismatch in terms of what I believe would succeed and in terms of what actually succeeds. And I think that's the same thing that the Labour government has to do. It has to be pragmatic. It has to be like, this is the idea that we're going to try, and therefore this is what will happen. Exactly what you said with the 0.5% stamp duty, they could be like, we need more tax revenue to be raised. But looking at like the Laffer curve, if people aren't willing to actually go and list, they're only going to get 1 or 2 million. And for a company that's got a $3.8 trillion GDP, only getting 1 or 2 million in revenue relative to the lack of jobs being created, relative to the lack of businesses being brought to the UK, that is a major problem. So how can they add more subsidies like we had with Tesla and all of those cars being bought? How can we add more things to say the UK is open for business, come back to the London Stock Exchange? The second one, a business called Caoshi, which has taken the world by storm in 2024. I mentioned this in the Markets podcast last week. 2024, they became a betting platform on political elections, and the Supreme Court actually allowed people to bet on political elections, whether you thought Donald Trump or Kamala Harris was going to win. And now they're actually being able to allow a betting option for people under the age of 21 in the US. I actually need to look into why this is being allowed, and it's also legalized in all the states. But what I think is so interesting about Caoshi is that it has a real-time ticker on their website. So, do you think Liverpool or Manchester United will win the game? Do you think that who do you think will win the New York City elections? And so in real time, depending on things that are happening in the real world, you see the impact. And I think that's another thing that can be used in terms of the Labour government in its focus on fixing the IPO crisis, as I would call it, is try something. Are more people listing? Are they not? Try something else. And the third thing is X. Elon Musk's what was formerly Twitter, now X, has real-time live news. And despite what people might think about, wanting free speech or not wanting free speech and the extent to which, things are too harmful or to which things are necessary, at the same time, whenever there is a major crisis, whenever something happens to the economy, whenever, some major news article comes out, not only are we seeing from the big news articles, from the BBC and Fox News and CNBC and CNN, but you're also seeing from the individual people what their thoughts are. And so you can actually cater your thoughts as a business owner, as an economy, as a politician like Donald Trump, as the Labour government, and actually rewire your thoughts towards that. So I wanted to mention YouTube channels, Pragmatism, Caoshi, and X in terms of ways that, I think it's one thing to simply say, this needs to be improved, go fix it. But another thing to say, focus on the grassroots, focus on the people, what's the root cause, why are people looking at the US, why are people looking at, all of these other countries, Singapore, Mexico, etc., to list on. Where is the UK lacking? Simply saying we are the best and the most prestigious isn't good enough anymore, and going there. Do you have any more thoughts to add on those things, Luke?
I think the three points that you raised there are very interesting. And first of all, the $1.5 billion IPO was Princess Group from earlier. But yeah, I think it's very. Yeah, I think the points you raised are very important and very interesting. Look, the UK, I don't think we can no longer think of ourselves as like the number one, country that it once was, or even according to this data, top 5, top 10 country is in terms of place to do business. So I think look, the government has to acknowledge that and take a long, hard look at themselves, at the country. As you said, there are very smart people in this country, and the government, I'm sure of it, is full of very smart people who know a lot more about this kind of stuff than I do. And not just in government, as you said, Oxford, Cambridge, all these prestigious universities across the UK. I think it's a very critical time to have a look at what's been occurring in the last 5-10 years, and I think we can all agree that it cannot go on like this. If I personally, I don't know about you, I'm sure you'll agree with me, but I don't want to be looking at the news in 5-10 years and going like, oh, the London Stock Exchange is not even in the top 50. You know what I mean? It's so I would love to see news where it's where the London Stock Exchange is rallying back up and maybe become top 10, top 5, one of the biggest stock exchanges in the world again. So I think it's time. The time's now to act, and I think that comes from the government in itself. It's got to make investing and investors more likely to stay in the UK. Got to make business more likely to stay in the UK, want to come to the UK to conduct their business. Even with tax and stuff, ensuring that these millionaires and high net worth people stay in the UK, because that will only help with M&A transactions. And um, so yeah, I think the time's acted now, and I think it's a very critical time.
There's often a thing with regard to venture capital investment, and something that I've kind of thought about is that if you had a pie, and the pie was representative of $100, and you gave I had 50, half the pie, and you had half the pie, but then we had a new partner, and they come and take a tenth of the pie, so I give up 5% and you give up 5%, so we now have 45 and 45 and 10%. That pie is staying the same size, but yet we're giving up little bits of it. And I would argue that that's what the UK is right now. Like, it's not growing too much. There isn't anything significant going on. The pie used to be bigger relative to other partners in the world, and now it's smaller. And we're all fighting over the little scraps. Whereas what a VC will do is they'll say, hey Luke, hey Harvey, hey third investor, I'll take another 10% of the pie, but I'm going to add another pie on top. I'm going to double the amount of money you have in your business. I'm going to enable you to hire more people. I'm going to enable you to grow. And then we can focus on getting more chefs, more ingredients, make more pies, and make the overall pie bigger. And so although we may have gone from 50% of the pie to 30% of that pie is now 10 times bigger. And so we've made like 5x the amount of pie that we had before. And I think that's the approach the UK should take, in that we were one of the global financial powerhouses on the planet, and maybe people might argue that it still is. I would argue that it's dropping off pretty significantly, as shown by this recent statistic, not only just in terms of the numbers themselves, but also looking at the brain drain of many people going to the US, going to China, going to Singapore, going to Europe, and all of the other countries across the world. I would also look at, not what are we now, struggling, with this $50 billion gap that needs to be put, but where do we want to go? I would look at the UK as, right, we are in the situation we're in now. Let's not go into panic mode thinking how are we going to keep the lights on this year, next year, the year after. Obviously, they're all important things. But how do we build for the next 5 years, the next 10 years? I mean, going back to Saudi Arabia from before, that is something that they've done incredibly well. With Saudi Arabia Vision 2030, even with their incredibly optimistic builds with these, like the line with their, it's like this multi-billion-dollar project in which they're trying to get this entire city in this one line for millions upon millions of people, is they're actually coming up with these ideas for not just our generation, but generations to come. And I can't think of any projects apart from something like HS2, which is, spending $68 to $100 million on, providing home for 80 bats or something like that, that is actually going to truly revolutionize not what just the UK is, but what the UK will become. And I actually think that the way to get there is AI. Jensen Huang, who is the CEO of NVIDIA, who is obviously, NVIDIA probably being the biggest or one of the biggest names in AI at the moment in 2025, has said that the UK has some of the best talent on the entire planet for AI. Oxford, Cambridge, all dotted around the country, not only from a pure, the universities that they're at, but also how close they are in terms of collaboration. If I was Keir Starmer and I was the Labour government, I would say, all the data centres in the world, come here, come build in the UK. What you can use our renewable energy, as Donald Trump's going away from renewable energy, invest heavily in renewable energy, or even in non-renewable energy, open up the North Sea, let companies come here, focus on generating energy, put in subsidies, get rid of regulation, whatever needs to happen to get all the best minds on the planet for AI. And I think that's the way to make the pie in the UK much bigger. And I think that's something that needs to be focused on. I wanted to quickly just mention a few more mini topics of the week before, coming on one final big one. So looking online, there's a 97% chance, according to the Wall Street Journal, of the next Fed meeting having another rate cut. I've already mentioned the impact of X and Caoshi, and more of the focus on the individual investors having a much bigger impact on the broader market. Eurozone unemployment ticks up to 6.3%, inflation hits 2.2%, and the jobless rate rises from an all-time low amid softening growth. Headline inflation accelerates on service costs, prompting the ECB watch on policy amid US tariff ripple effects. Global trade fragmentation accelerates with US tariffs at 1930s highs. Effective US tariff rate reaches 18.2%, which is the highest since 1934, driving export shifts, for example, China to Europe at 6%. And the World Bank cuts 2025 growth to 2.3%, citing barriers and geopolitics. And lastly, we're seeing more mainstream access to crypto. Many investors want to hold cryptocurrencies, Bitcoin or Ether, without the hassle of holding the cryptocurrency, which can be lost or stolen. If so, they have a few fund options to consider, such as crypto trusts, strategy exchanged funds and spot ETFs. So I'm interested to see, as crypto becomes more mainstream, do shops start to accept cryptocurrency? Do more people start to invest in them? Is this, insane rise of how Bitcoin has done in the last few years, does that continue or does it revert back? Everyone's a genius in a bull market, so interested to see what happens there. And the last big topic that I wanted to touch upon is the following, which I'll read to you now. So within the United States, Moody's has stripped the US of its last AAA credit rating, following similar moves by S&P in 2011 and Fitch. The downgrade was precipitated by the US House passing a spending bill that extends tax cuts and is projected to add approximately $4.3 trillion to the national debt over the next decade. The cost of servicing this debt is escalating rapidly. The annual interest bill is forecast to extend $1 trillion in 2026, surpassing defense spending to become the single largest item in the federal budget. This trajectory is described as non-sustainable. So just to repeat that, the debt in the US is going to be larger than the amount that they spend on the military in 2026. It's the most the US will spend on anything. It's just the debt payments, not even the debt itself, just the payments. What's your take on the US debt? What's your take on the safest investment, US bonds, being downgraded from AAA to lower than that? What's the wider impact for the economy? Do you think that the US can ever come back from this and pay off its debt? And what do you think this will mean for other countries such as the UK, Japan, etc.? Yeah, just kind of give me your thoughts on that entire situation.
Yeah, look, it's a very critical time for the US when it comes to that. As you mentioned, 2026, their biggest expense is just debt repayments. Not even, as you mentioned again, not even trying to reduce this debt. If you're spending 6 or 7% of your GDP on debt repayments, look, that's a very significant portion which could be spent on other areas of the country. And if this continues to rise, it will be detrimental to the country. All this public money, that the GDP that the US government, the money that the US government spends on the country, on its fiscal policy, and it's all to help the country infrastructure, healthcare, other border control, and all the other aspects, which all benefits the general populace of the country. And so if you're spending 6 7% on just repaying these debts, it will have a serious consequence on the standard of living in the US. I think, look, yes, there has been a downgrade in the credits, but the Treasuries still remain a global risk-free benchmark, and the dollar is still its reserve currency dominant. So it hasn't triggered a crisis just yet, but I think it's definitely, like the UK with the IPO markets, it's definitely an area of concern that needs to be looked at very quickly. And the US debt has grown rapidly. Well, it's grown not rapidly, but it's grown steadily over the last 10 decades. It's not something that's just suddenly sprung upon us. It's been topical for the last few years now, but I think this almost has to be a wake-up call. And obviously presidents have in the past, and even the current, and even Donald Trump now has looked to try and reduce this debt, as seen by Doge earlier this year, which run by Elon Musk, and just looking to cut down government spending and increase tax, which could be argued one of the reasons why tariffs have also been implemented. Because the amount of money that the US government earns from tariffs is hundreds of billions of dollars, which can go straight into trying to reduce these debts, or repay them. So very beneficial. But I think now you're looking at a US where these government debts have really started influencing the actions of the country. And look, it's not obviously the only reason why the tariffs were implemented into the onto other countries. But it would be very interesting to see if the tariffs would have been as severe if hypothetically the US had no debt, for example, and it was purely the job markets that was struggling in the US. So yeah, look, we've gone to a point where, as I said, the US policies are being affected by the debt, and I think um, for future sake, it has to be addressed right now, and whether that be increase in tax or reducing government spending, which I think they already took as far as they can really go through Doge. Um, they have to raise capital to repay this debt, and they have to reduce the total share of GDP that is being spent on this debt in the future.
I think a huge problem with a democratic government, and I do believe in a democratic government. I just want to say that I think that is the best way to govern. But if you were to look at the way that China could go about things with its central planning, there isn't the struggle to think who's going to get into power next. The CCP can simply decide this is what we want to do in 10 years, 20 years, 30, 40, 50, 60, 70, 80. And purely from a focus on how do we succeed in the long term, China is going to win that battle more often than not, because the actions and choices that they're going to make today will serve for generations to come. Where just in terms of the systems that we've got in the US, and where we've got an election cycle every 4 years, and in the UK, at the longest, we've probably got an election cycle every 5 years, the governments and their priorities are simply going to change. And another big problem is stuff like the economy. When you see a good, strong growth report with GDP, low inflation, strong job report, whatever it is in the country, that can either be pinned on the decisions that the current government is making or the government before. And so something like the debt, with the debt actually outpacing military spending, that is an immediate cause of concern. But it's not like the US government is going bankrupt within the next 5 years. I mean, it might do, but I would argue that is incredibly unlikely. Does the US government go bankrupt in 30 years, 50 years? Possibly at this current rate. If the debt repayments continue to get so large and the US economy does not grow at a significant rate to outpace that, alongside that, Tesla's Optimus robots aren't able to lower the cost of production, and nor does AI is able to, get rid of that impact. That's a possibility of that occurring if the US do not take steps today. But whether it's Donald Trump or the person that comes after him, or the person that comes after him, or the person that comes after him, if trying to cut the debt, if that is not a priority for them, nothing will happen. I mean, even Donald Trump, when he tried with Doge to actually go out and cut government spending, they failed. Elon Musk, arguably one of the most intelligent people on the planet, or at least one of the best business people on the planet, was not able to cut the government debt now. So why do we expect that we'll be able to do it in 5-10 years time when it's a lot worse? That is a big question that I think has to be focused on, and I'm really curious how the US goes about doing that. The other topic, which I said the last topic, but I want to touch on, which I forgot to mention, was the US is in its shutdown. It's been shut down now for the 6th day, which risks delaying both job data but also national park closures. It is the first time the US government has shut down in nearly 7 years. I think a big impact on that is not only I'll let you say the numbers, Luke, in terms of how much money the government is losing, but I think it not only has an impact there, but also there's the focus on, those at the top aren't able to get to some form of resolution and planning, which then trickles down to businesses and be able to plan less of the future. Could you add the numbers as to how much money the government is losing, what the impact of the shutdown will be, and any other thoughts on that matter?
Yeah, so to look at a pure money point of view, the White House estimates that they're losing about $15 billion in GDP per week if the shutdown persists. And I think that if the shutdown persists more than this week, this number could get worse, because there's going to be more cash flow issues. There's going to be more businesses affected, and it's going to have a knock-on effect, which can really slow down the economy quite substantially. And yeah, major. A lot of government workers are now being furloughed. And although previously in the previous standoffs, they have been reimbursed after some time. There is, if this doesn't happen, then it could be a massive cause of concern for employees. Um, you know, for example, the SEC is furloughing over 90% of its workforce, with just minimal staff being available for emergency oversight. Um, and look, that's again massive cause of concern. And from a business point of view, there's a lot of essential services which are very reliant on this government's funding, whether that be agencies, um, or even government, businesses which directly fund the government. If they're not receiving this, if they're not receiving the credit and money from from the government, then they're gonna all have cash flow problems. As I said, in this maybe 1 week potentially, there won't be that as many issues as I would imagine. A lot of these companies will have cash flow for to sustain 1 or 2 weeks of poor management. But if this continues on for 3, 4, or even more weeks past that, then they'll have a lot of cash flow problems and they'll have a lot of financial issues. And you know if the worst could happen and some of these companies could go bankrupt. Look, and while that is quite a far-fetched um, outcome for it to occur, as no one is expecting these, spending issues to continue for that sustained period of time. I think as a result of the political divide that you see in the US between the Democrats and Republicans, it's very hard for these parties to agree with one another now. Which is why I think that these shutdowns could become more common in the next few years. Um, I'm not a expert on US politics, but I do know that these shutdowns were caused because there are certain areas that the Democrats wanted in the spending that the Republicans didn't concede, and vice versa. And obviously there's been a lot of blame game going on from both sides. Blaming the other side for the lack of spending this week. But I think because of this divide, it's inevitable that it was probably going to happen at some point, and it's probably inevitable that it will happen again. So for these businesses that are being affected, I think they got to start really preparing for the worst again, being ensuring that they have the cash flow to stay alive in case these spending issues occur for a week or two, or let's hope not, but more than that. Um, and yeah, I think there's a lot of risk involved for government business affected to the government in the future.
Luke, what was something I told you just before we started this podcast?
Um, you're gonna have to remind me.
Something about like news. What did I say?
Sorry, you're gonna have to remind me.
So I was saying that there was nothing like particularly out of this world news related for this week.
Oh yeah, that's
Okay,
right.
cool.
Yeah.
As of 2 minutes ago, the French Prime Minister just resigned.
Oh, wow.
So I'm gonna just add some like color on that, and then we can break that down.
Okay.
So as of 5 minutes ago, French Prime Minister Sébastien Lecornu submitted his resignation to President Emmanuel Macron. This is from Grok, by the way. I haven't just made all these notes. Just one day after announcing a new government cabinet. This marks the second government collapse in France within a year, deepening the country's ongoing political crisis. Lecornu, who had been appointed in late September 2025, following the ouster of predecessor Michael Barnier, cited insurmountable budget woes and parliamentary gridlock as key factors. Macron accepted the resignation, according to reports from BMF TV, citing LSE sources, leaving Lecornu to serve in a caretaker capacity until his successor is named. The event has triggered an immediate market turbulence, with the euro dropping 0.56% to $1.0676 against the dollar, and the CAC 40 index falling 1.8% at open. I also mentioned during this podcast with Luke that I thought X was really good for its real-time market impact. The reason it says is we can look at tweets from the left, the far right, and the centrist. The French government don't have a particular one party with all the power, and so you have that impact. So Macron hailed it who's from the left party, hailed it as a victory against austerity, vowing mass strikes and pushing for snap elections. Mathilde Panot tweeted, "The people have spoken, no more Macron puppets." The far-right party, Le Pen, said Cornou's exit was an inevitable chaos from Macron's arrogance, positioning RN as the only stable alternative ahead of 2027 presidential polls. And the centrist Renaissance Party MPs expressed frustration, with one anonymous source telling Le Monde, "We're back to square one. Disillusion isn't an option until July 2026. So it's pretty crazy. You know, France hasn't had, I think this is the second time within the past year in which a prime minister within the UK, within France, has resigned or stepped out. As I mentioned before, the immediate trigger was Le Cornu's inability to secure support for the 2026 budget draft, which proposed 50 billion euros in austerity measures, including VAT hikes on luxury goods, cuts to public sector pensions, and reduced subsidies for green energy transitions to curb France's 6.2% GDP deficit, projected to hit 170 billion euros in 2025, with key factors being the parliamentary opposition. A cross-ideological alliance of 320 lawmakers signalled intent to file no confidence motions within days. Economic pressures. France faces EU scrutiny under the Stability and Growth Pact, with a potential downgrade with Moody's looming. Inflation at 2.1% and unemployment at 7.5%. And lastly, Macron's weakened position, with approval ratings below 30%. Macron's assessments on centrist continuity alienated potential allies. So I threw quite a lot there, but I wanted to give the entire backdrop on everything going on. Luke, what's your immediate take to what's been going on in the last 5 to 10 minutes?
I mean, yeah, look, it was. I mean, to say it's quite unexpected would be almost funny, because obviously, you know, France has gone through 6 prime ministers in the last couple of years. But I think it is slightly surprising, because the budget, he hasn't released the budget yet, which was expected to be released in 10 days' time. But look, obviously he said that he wouldn't use Article 49.3, which is to push the budget forward without parliamentary approval, which I believe a previous prime minister had done earlier in the year, and it failed miserably, and he had a no confidence vote and was kicked out. But yeah, I think it was a political gamble to say that he was going to outright refuse to do it. It does appear, obviously made him appear democratic, but did again then leave him being vulnerable to being voted out, which occurred. And I think for Macron, it was probably orchestrated. Macron's rating has sunk quite harshly, and he, with now the Green and Social parties, Socialist and Green parties, saying that, look, they're not gonna, in this current moment in time, they won't support the budget. They've got no partner, so Macron's probably decided, look, it's probably better to just reset. It's going to be that if they try to push the budget forward in 10 days' time, they'll probably lose out again, and it'll be another damaging parliamentary loss. So by just, by making the prime minister resign, and cutting the losses early, Macron probably assumed that it would be less damaging to him and the centre party that he's part of. I think with France, it's a very interesting time. Like, there's the amount of prime ministers they've gone through in the last 2.5 years has been very unsustainable, and something has to give. Whether this part, whether the centrist party can keep in power for that much longer, I think it's almost like the writing's on the wall. It almost feels like the same as early 2024 and late 2023, when the UK election was announced, and it was pretty clear that the Labour Party were going to win. I think in France, unfortunately for Macron and his party, they probably won't be in power whenever in the near future. And look, as like in the US, their financial deficit is around 5.5% of the GDP, so slightly lower. But again, they're struggling struggling a lot, and it's something that's very pressing in France and that the people feel a lot about. And obviously, all these parties have um, different ideas to how to reduce the financial deficit, and it looks like that either the Socialist and Green Party or the far right party will look to lead to reduce the budget. But even then, look, it's a very fragmented parliament in France, and it might be the case that they might have the same issues in the future. So I guess we'll have to find out. But I think yeah, the French economy is definitely and politics as a whole is definitely one to keep an eye out on in the next few years, because I think there'll be a lot of changes upcoming.
Yeah, I think that's similar. I don't know if you can check while I add this piece, but I'd be curious to look at France's M&A activity as well, because increased uncertainty will decrease the amount of both companies wanting to be bought and list on the stock exchange, but also the amount of risk that businesses will be willing to take, as all of these different parties will have a major impact on what these businesses do moving forward. So it's even like if you look at people mining gold, once the gold price goes beyond a certain level, people actually mining the gold will be much more incentivized to get it out of the ground, because the price of gold will be able to pay for the amount of the cost of actually getting the gold out of the ground. And so the same thing being raised with the governments, in terms of different governments will tax different amounts depending on the different industries they're in. The far right and the far left party, as they're known, would have completely different implications. And so I think with all of this uncertainty, that doesn't do any good for the French economy. I think best case scenario is actually for one of these companies to get a majority in power, so at least from a business standpoint, they can have a lot more certainty on what to do moving forward. Obviously, you want a more balanced government, but the extent to which this is actually effective has to have that question raised. Luke, were you able to find the number on where they
Yeah,
were in
so
activity?
so if look, well, France is part of the European market, so we'll be having to look at Europe IPO, and then um, so the Europe IPO's proceeds in 2012 are projected at around $20 billion, euros. So, and France accounts for 3% of that, so 600 million euros. So in pounds, about 500 million. So currently slightly higher than the UK, um, but these are still projections as well. So um, I don't know. I can find exactly what the French IPO worth is right in this current moment in time. Probably still harder in the UK if it's if you just think about the fact that it's been 3 quarters of the year, and if they're expected to get 500 million pounds, then you'll be looking at 375. So 375 million pounds worth currently, which is higher than 250 in the UK, but still struggling. And yeah, I think look, France appear to be in a much worse state than the UK is, surprisingly. So, um, actually Europe as a whole is massively down this year in the IPO activity. So I think about 6 or 14% um, projected. So yeah, I think there needs to be changes made in the European market compared to the US.
Yeah, I think one of the big benefits of the having the euro and being in the EU is that when a country like France is struggling right now, all these other countries can go and lift them up. Similarly to when Greece was not doing too well 10 or 15 years ago, all these other countries could lift them up and help them do well. And so there is an element of increased certainty as being part of the EU, because it's not just dependent on the individual country but more on the collective. But at the same point in time, as France is not doing as well, as I just mentioned before, with the impact on the currency for the EU, which affects all of those countries, there's a negative wider implications, as when one country isn't doing as well, there is a negative impact on the collective and not just on the individual.
Mhm.
So final question, Luke, is there or are there any more major topics to mention any big, more thoughts on any topics we've mentioned today that investors and people should be wary of in the week to come?
Um, I think one topic that is quite interesting is obviously recently there's been, a thing we talked about a month ago, maybe a month and a half ago now. We talked about how the Japanese Prime Minister resigned. So new Prime Minister's actually been not elected yet, but is expected to be elected on the 15th of October next Wednesday. Next Wednesday. And yeah, her name's Sane Takaichi. She'll be the first female Japanese Prime Minister. And she's a very conservative hardline. She's her I believe her idol is Margaret Thatcher. So I think that says a lot about what her policies will be. And she was a protege of Shinzo Abe, the late Prime Minister of Japan. And so she's got a very business orientated policy, so more fiscal expansion, keep interest rates low, increase government spending. So the Nikkei actually rallied quite hard when Nikkei's already at record highs, but when on a couple of days ago when she was announced, it rallied quite hard. Albeit, however, the yen had the biggest drop in value compared to the dollar for the first time since May, where it dropped by 1.9% a day because Japan's inflation is still high, and if the Prime Minister wants to keep interest rates low, it's a bit of a it's not it doesn't make it puts a bit of pressure on the Bank of Japan. So I think that'll be quite interesting to see what happens in the next 10 days when she gets elected and see what kind of policy she implements. But looking outside of that, I think again, like just looking at the UK IPOs would be very interesting. See if these companies will actually list, and if there are more IPO transactions this year, which I think very critical for the UK. Also, EA looking at what happens with them, what happens to their valuations, and if Saudi Arabia or even other sovereign wealth funds invest into more of these types of deals, and it'll be very interesting to see. I think 55 billion LBO, obviously, as mentioned numerous times, is the biggest LBO in history. But it'll be interesting to see if that will get broken sometime soon. And yeah, even with like Tesla and Pfizer, I think Tesla, it'll be interesting to see if they can continue this positive momentum that they had in Q3 into Q4, and they can continue to grow sales, they can continue to increase market share after a bit of a tough period over the last year. And with Pfizer, how this deal occurs with the US, and if this will signal more collaboration between Big Pharma and the US government to help consumers, Big Pharma, and the government as a whole.
Well, so I feel like we've touched on a huge amount of topics today, ranging from EA, Tesla, Pfizer, UK IPOs, rate cuts, Caoshi, Eurozone, tariffs, crypto, the USA debts, USA shutdowns, Japanese PM, and the French Prime Minister resigning. Thank you so much for coming on today, Luke. I'm going to set a challenge. If no one ends up doing it, we'll have to do it ourselves. But this video has to get 20 likes and 10 comments if you want to see Luke back on Personable. He's now been on Personable 3 times. So if we're going to get to the 4th, we've got to see if the viewers want him back. So 10 comments, 20 likes. Anything final to add, Luke?
Go like and comment in the below, and subscribe and turn the notification bell on. Really helps Harvey out.
Helps Luke out as well. He's got to
does help me out as well, to be fair. Yeah,
Luke's got to get to the 4th podcast. Well, thank you so much for listening to the podcast today. Please let me know if you're liking the once a week markets episode. The episode last week has now done more watch hours than I've ever had on any video combined, on any video on Personable. So if you want to see these once a week, twice a week, 3 times a week, if you like more of the discussion with Luke and I, or you would like more traditional hedge fund managers, or you like both of it as well, please let me know. I love doing these episodes with Luke. I love doing them with hedge fund managers. I love doing them with other people and learning a lot. And I hope you learn a lot too. Have a great week ahead. I hope that all this uncertainty and instability doesn't get too overwhelming. And I hope that Personable Markets is a great way to be able to break it down. So thank you so much for listening. Luke?
Yeah, thank you all for listening, and thank you for having me on, Harvey. Hopefully we get to a fourth episode sometime.
We're definitely going to get it. I'll comment if no one else comments.
Okay, thank you, mate.